This is the third segment of our discussion and talk about tax shelters. I hope by this time you're comfortable with tax shelters and you're ready to go out and buy one. And we'll complete our shelter now. Last week we were talking about films with Sheila Margady of Merrill Lynch. Sheila, you've got some successful films in distribution now.
Yes.
We're just trying to recall titles, and the one that escaped all of us for the moment was Shoot the Moon.
That's right.
Which, by the way, got very good reviews. Then you mentioned another film.
Another film which just opened to fabulous reviews. It's called Diner. Mm-hmm. And that's also
Stars
part of the... It stars people that I don't know the names of, unknowns. Having a big name in the starring role doesn't really predicate success in the film industry. You asked, though, about something that was important, and that is about budgets. Everybody hears all this terrible publicity about going over budget.
Apocalypse
Yeah,
Now.
I think you meant Heaven's Gate, didn't you?
Well, okay.
The point is that there are certain studios that are known for maintaining budgets. Our nameless new joint venture partner, for example, has gone...
A good reputation for
Well,
being...
they've gone over budget less than 5% of the time over the last 10 years. Their senior management has daily and weekly budget reports, and if a film is going over budget, they can go and write quickly. In fact, the president of the company, the chairman of the board and president of that company, will go in onto the studio lot, onto the set, and see what's wrong. That's a kind of hands-on support, and that's what we look for in the joint venture partner.
We only have the Money Corner segments only run 10 minutes, but I'd love to get into a discussion of creativity and restrictive budgets. I think there might be some lack of compatibility at times, but that's a different agenda. Before we came on, I looked at a mailing sent out by Hilliard, which is one of your tax shelters, David. And this is a report, I assume, from the general partner to the limited partners. I was very interested. They say in here this is the Schedule K1 and the attachment to Schedule K1 and the computation for income tax return. And here they have what really is a rundown of how one would prepare one's tax return.
That's right.
Now, in this case, the general partner of the oil and gas venture is doing the accounting or providing all the guides for the accounting so one knows what kind of deductions to make for his tax return.
That's right.
He or she makes.
They try to make it as simple as possible. I brought this thing in. I don't know how effective this is going to be to show you, but this was a jacket, a little jacket that came with a K1 that one of our general partners...
The K1 is what?
The K1 is it's kind of like your 1099 in earnings, but this happens to show the profit and loss of the partnership. So it's something that you present just like a W-2 or 1099
Give it to your accountant,
Give it to your
and the
accountant.
detailed work is done for you.
Right. Now, if you wanted to be just an accountant of your own and do your own form,
It's comparatively easy.
It's fairly easy. I don't want to say it's the easiest thing in the world, and that you could do it while you're watching the evening news, but you obviously could put your own together.
Both of you know our real estate ventures, Hubbard. Now, they do the same thing in real estate. Sheila, I'm curious in terms of the films. Does the general partner try to do something like this?
Oh, sure. There are reporting requirements that Merrill Lynch maintains.
Imposes on the general partner?
Sure, in terms of quarterly and monthly reports. In terms of the income tax reporting, film ventures also have tax write-offs.
I'm aware of that.
Tax advantages.
As a matter of fact, the film venture has the highest, usually the highest one-year write-off of any of the tax shelters. Isn't that true?
That's absolutely right. That's absolutely right. You get the use of depreciation because by court ruling, motion pictures are tangible items which can be depreciated.
And then you get the use of, if they borrowed money to shoot the film,
you
the
get
interest costs.
the interest cost. You also get a write-off for advertising and print expenses. And finally, you get investment tax credit.
Sheila, let me interrupt you for a moment.
Sure.
We have to have an announcement. We'll be back in just a moment with more of our discussion on tax shelters. Stay with us. We're almost at the end of our three-week segment or three-week review of tax shelters with David Geliebter and Sheila Margady of Merrill Lynch. We only have a few minutes left. I wonder, David and Sheila, whether you couldn't summarize and kind of recapitulate what you've been saying and what the investor should look for, what are some of the rules of thumbs? If you had to come to your mother or father and sell them a shelter, what would you try to do and what would you try to help them avoid?
Well, I think that what you first want to do is to make sure that you're doing business with a major company in whatever area you're working
By
in.
the major company, you mean the general partner, or
You
talking about
either
the broker
want,
bringing it
no,
to
no,
market?
no. Well, first of all, you want to deal with a company that's been around for a long time, the investment company, the broker.
Okay.
You also want the general partner or the joint venture partner to be a major, significant company who has a track record in that industry
So
that
look
you
for
can
the
measure.
credibility of the general
Look for
partner.
credibility, and also make certain that you're not putting all of your money into one basket. You asked whether we would be investing in Broadway plays. You don't want to just invest in one of anything, not one oil well, not one film, because that diversification means safety.
So then I can assume that as, Sheila, as you work on product, tax shelters in the entertainment business, they're usually going to be a package of films or a
Absolutely.
package of plays or a package of musical comedies or a package of symphony orchestras, but it will be more than one venture.
That's right.
So
And
one box office bomb does not take the ship down.
precisely. And the final thing that you want to make sure of is that when you invest, your investment will be able to get profits from all markets in which entertainment product can appear. And that includes television, tape, the video revolution, as well as motion picture theaters.
David, would you like to take that from your point of view and translate or complement or add to?
I was gonna give it in a broader context.
Go ahead.
I was gonna say that one of the reasons that we call our department the tax investment department and not the tax shelter department is we want people to focus on the investment, the economic returns. And so the tax benefits are nice and the write-offs are very attractive, and in many cases, truthfully, that's why people are attracted to this business. But bottom line, you want to get into an investment, whether it's oil and gas or real estate or venture capital or leasing or whatever, with the bottom line economic return in mind foremost, so that whatever it is, this is just like making any investment you make in your life. Invest for the results. Don't invest short term for the tax benefits. And the other thing I was going to say was that look at this in terms of your overall portfolio. No single investment is going to meet all of your investment criteria. This is going to solve some of your problems, and you're going to need probably that IRA, you're going to need some money in the bank, you're going to have to invest in whatever you want to invest in, real estate or equities or bonds, but make this a part to fit in with the whole pie of your investment objectives.
I want to thank both of you for being with me. It's been very interesting. I really have enjoyed this. I feel a little frustrated. I feel that we've only touched the tip of the iceberg. There's so much more to talk about in terms of tax shelters, and perhaps the way to get around that is to invite you back. What we can do is show a film that Sheila
Or call
markets,
your-
or you
call
can
your
bring
account executive.
Yeah, or you
That's
can bring
right.
cans of oil and pile them here, and
That's
we'll
right.
go swimming in
We'll
oil.
drill right here.
We'll be back again with you here on the Money Corner next week. Join us then, and Sheila and David, thank you for being with me. Good night, everybody.